Joining us now, Julia Pollak.
Bloomberg Audio Studios.
Recruiter,
podcasts,
chief
radio,
economist is
news.
fine, but far more importantly, she survived Greg Mankiw at Harvard years ago.
This is the
Take what
Bloomberg
you
Surveillance
learned from
Podcast.
Dr.
I'm Tom
Mankiw
Keene, along with Paul
and
Sweeney.
bring it
Join
over
us each
to the
day
new,
for insight
new
from the best in
Ziprecruiter
economics, finance,
series
investment,
and
and
labor
international relations. You can also watch
You are
the show
on the
live on
absolute
YouTube.
cutting edge
Visit the Bloomberg
of Go Get a
Podcast
Job.
channel on
How does
YouTube to
old
see
line
the show
Mankiw
weekday
economics
mornings
get
from
over
7 to 10
to the
a.m.
new
Eastern
labor
from our global
economics of
headquarters
Ziprecruiter?
in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business
About
app.
my CapEx orders today, we would have expected to see a much larger decline in business investment with such high rates.
Yeah.
And so, the data that's coming in is pretty good, but it's spectacular compared with where people thought we'd be now a year ago, or over a year ago when rates started rising.
So when you talk to your companies here, what's the challenge they have to attracting, retaining talent here? Because I look at a JOLTS number that's still really high, and I'm like, I don't know, all the Sweeney offsprings, they're all employed here. What are your employers that you talk to telling
Paul,
you?
you're the only father east of the Mississippi River whose children are all employed.
Gainfully
I tell you,
employed.
it's a domain set of one. Continue.
Well, we have had 26 months now of unemployment at or below 4%.
Yep.
That's the longest period since the 60s.
Really? Okay.
So this is still an incredibly tight labor market. Employers thought things would get easier. They thought leverage would swing all the way back to employers. It hasn't really happened. They're still struggling out there, and they're still finding that retention is fairly low. People are job hopping and finding better things.
To me, and I could be wrong, there's so much hot air out there now about this new how you get a job. What do you see in the day-to-day grind at ZipRecruiter? Like, does a resume matter anymore? Do you have to master all this digital? You got someone here, I needed a change to be able to make more money and have a life outside my job. Who doesn't? ZipRecruiter helped me discover something better. I think our audience worldwide is fascinated by this new method.
Right.
How's the method work within our economy?
And so for years, job search was centered around search, right? People typing in a job title and finding the few jobs that were in their area. Now, with AI matching technology, people create a profile, they answer a couple questions and say what they want and what they're interested in, and then the technology instantly alerts them to jobs that match their skills and experience and shows them jobs they wouldn't even have considered. And that is where the sort of exciting new discovery is taking place.
I just wanted to be the bat boy for the Rochester Red Wings. That wasn't, if I had AI back then.
If you had AI back then. So what are the sectors, what are the sectors that are just really in dire need of just workers?
So there are many sectors where the workforce is aging, where people are retiring in huge numbers, and where the talent pipeline is shrinking. People are not enrolling in accounting anymore. They're not enrolling in the skilled trades in the kinds of numbers that we need.
I have a whole theory on this.
And so a lot of jobs are just seen as kind of old
Why
school.
Paul and I are asking, because we've survived this in school, what does the accounting industry do? It's a broad statement, not the big four, but what do they do?
Well, so companies like KPMG are saying, well, we've got an image problem. Young, smart people want to go into tech. They want to go into AI and do all these fun jobs. They don't want to be accountants.
They have to pay them more.
So, yeah, one is increasing pay.
I think the pay is Paul.
That's a tough
to
job,
me,
too,
it's a tough
hours.
job.
But the bigger issue is the perception that it's really hard and stressful. So the number one reason people give us for having quit a job is stress. Okay. People are increasingly, young people especially, are prioritizing work-life balance. And so what KPMG and other companies that are struggling to recruit accountants are doing...
I'm prioritizing work-life balance. Are you kidding me? What's an accountant make nowadays?
Six figures typically.
Six figures, 120.
Right.
You pop them 180, and nobody's worried about stress.
Work-life balance anymore.
Help me here, Paul. I'm going to get in trouble.
Well, what companies what industries that are very seasonal, like accounting, are doing now is increasing staffing. generally across the year, right? So that you don't have people who are mostly kind of idle for several months and then who have these massive rushes where they're working 24/7. The companies are absorbing that seasonal risk and kind of overstaffing during parts of the year, and then giving people an easier time during tax season.
How does this back to home thing? How is it playing out here? We're 4 or 5 years into it here. How do you think how is it shaking out, and do we still have more room to go in terms of it shaking out?
Very, very resilient. Remote work has just about stabilized in job postings now at around 11%. There's still a huge mismatch, though, between demand for remote work and
Now, when you say remote, is that 100% remote or is that hybrid?
Remote and hybrid.
Okay, hybrid. Okay.
65% of job seekers say they would prefer to find a remote or hybrid job. So there's huge demand for remote work. 11% of the people who just quit jobs are looking for remote work, and that's why they quit.
One final question is just so important. You got to come back. Where's she from? She's like West Coast, right?
Santa Monica.
She's like working like a 20-hour day, going down to Santa Monica.
Surfing,
surfing
go to the beach.
and all that. The absolute thing I hear from everybody older is that young kids won't work. Is that true? What do you see at Ziprecruiter?
Well, prime age labor force participation is the highest it's been since 2001, right? So it's not exactly true, but yes, there is a bit more priority placed on work-life balance, and companies are having to sort of improve and modernize the jobs they offer.
I think part of that's a pandemic. A lot of people just said, man, life is short. I need to prioritize some stuff.
I strongly agree with that.
I think that is, and I don't know, I think that's here for a while.
Don't be a stranger.
Yeah, thank you.
And we would love to come out to LA to have you and Lucas Shaw on the show.
Please do. We'll take you surfing.
We could do it. we could do it right by the pool of the Sunset Tower Hotel.
Yep.
Nobody's there at
They
7
love me.
a.m. I mean,
Yeah.
it's 3 or 4 a.m. We've got Julie over there for early morning cocktails. Julia Pollak, thank you so much for Ziprecruiter. This was fascinating. Joining us now, this is the interview of the day with good perspective on the frenzy of the moment. Paul, I'm embarrassed to say this, but I got to rip up the script.
Sure.
With BitDog at 56,000. with Liz Ann Sonders at Charles Schwab. She and I are on the same page on this. Liz Ann, you've done fiscal advice to our government. You've been involved in new administrations and giving them counsel on how to try to be responsible. As a 5, you were like 17, I remember.
20 years ago.
But Liz Ann, did Gary Gensler screw this up? How do you feel about the SEC greenlighting Bitcoin within our retirement plans?
Well, there's always caution around this, and as you know, Tom, we don't offer it. We do provide the opportunity for some of the ETF vehicles to be purchased or sold, but it's always with a wrapper around about understanding the risk associated with this. It's not a currency. It doesn't really provide and hasn't provided an inflation hedge per se, and that you have to treat it like a very speculative trade or investment in your portfolio. But beyond that, we can't control what all of our investors want to do. But I'm a skeptic. And I am just on crypto in general.
Paul, I'm going to get in trouble here, but I'm upset every time I go to the Bloomberg and do the symbol for Bitcoin that we have, which is XBT, X-Ray Boy Tom, and I have to hit the famous yellow currency button.
Yes, you do.
Next, it's not. I don't care where they put it.
Yep.
But it's not. I think it's more like an equity almost. But continue.
We'll talk.
It's not. Liz Ann's right. Folks.
I know a guy on the 6th floor we can talk to about that.
Yeah, work on that.
Hey, Liz Ann.
It's become very correlated to indexes like the NASDAQ 100. I think you're absolutely right.
Hey, Liz Ann, we're just kind of through the earnings season here. A couple more of the retailers left to come here. What's your takeaway?
Maybe yet again, but to a more significant degree, you saw analysts forced to lower the bar to a more significant degree than was actually necessary. And as a result, you've had almost a perfect round trip. If you go back to October of last year, the expectation was about 11% earnings growth for the fourth quarter. You started the reporting season down sub 2%, but then you've seen analysts have to ratchet things back up. And last I looked Friday, it was back up in the 10% and change. Now, In fairness, though, because of the way base effects work, that increase that we're now seeing in Q4 2023, because the bar gets set too low, you've seen analysts have to ratchet down estimates for Q4 2024 because the year over year is not going to be robust because you got that bigger pop in Q3. But I think analysts have been admittedly flying a little more blind in this environment called the pandemic era, where even though there's fewer companies that are not providing guidance at all, the guidance is just not quite as, maybe it was never precise, but the guidance is a little more loosey-goosey right now, leaving analysts to have to kind of finagle things on their own and also not adjust earnings too far out.
So one of the things, Lizanne, as people try to get a handle on those earnings is we need to see a broadening out of this market. We saw a little bit of it in November, December last year, but it still feels like this market may be a little too thin in terms of maybe the Magnificent 7 or 5 or however many are left are kind of really driving the performance here. And a lot of folks say that makes them nervous. How do you think about it?
So I do think there still is risk associated with the concentration, but it's nowhere near as acute as it was last year. To your point, that we've had to start whittling down from the Magnificent 7 to the sensational 6 to the fabulous 5, because we've seen that move from, in the case of Tesla, just out of the 7 in terms of the largest 7 stocks, recently dropped down to number 10, and you've had stocks outside of the sort of techie world like Berkshire Hathaway, like Eli Lilly, leapfrog Tesla. But I think what's happening, and you don't pick it up necessarily by traditional breadth statistics or just looking at the Mag 7, is there's more churn under the surface. So the NASDAQ index overall, at the index level, the maximum drawdown this year from a year-to-date high is only 3%. But the average member maximum drawdown, again, year-to-date from a year-to-date high within the NASDAQ is negative 22%. So there's a lot more churn going on under the surface. And I think in this kind of market environment, to get the true story, the narrative that the market is telling, you have got to leave aside just index level analysis.
Lizanne, 4 equity types in a room, you're going to get 17 answers on a rebalance. What is the Lizanne Sonders formula for rebalancing?
So I think to the extent investors can do it based on the implications of turnover, tax bracket, et cetera, I think portfolio-based rebalancing versus calendar-based rebalancing, letting actual moves in your portfolio, whether it's at the individual stock level or some group like the Magnificent 7 or at the sector asset class level, let the moves up and down as a share of your portfolio dictate the timing associated with rebalancing versus, say, what the mutual fund complex does, which is last week of every quarter. It's very calendar based. And I think that's just a beneficial way for individual investors to stay in gear, not have to make all or nothing decisions. And as I always say, do a version of buy low, sell high, which is, add low, trim high. And it's, I suppose, boring to talk about. I love when you guys ask me about that. But for the most part, it's not it's not the bombast that is more intriguing to people, but it's actually what matters.
Hey, Liz, and thinking about this market here, a lot of folks are saying, yeah, earnings are fine, but we got to focus on what the Fed's going to do. I'm an old sell-side analyst, so earnings still matter to me, but we can't escape that this Fed is really a key driver of this marketplace. What do you expect our Federal Reserve to do this year?
Well, as you guys know, we've talked about this a lot on this program and on TV. In advance of the better than expected most recent jobs report, the hotter than expected CPI report, we were not in the March camp, felt that was just too aggressive an assumption, not to mention the 6 to 7 cuts priced in at that point. And that's now shifted to an outlook that's a little more in line with the Fed's dots, but I think it's still too soon to tell. The Fed is data dependent. I think this is a Fed that took the elevator up, the opposite of what they normally do, which is take the escalator up. And I think they're going to take the escalator down in the interest of making sure that inflation has come down as staying there. The other really important thing, and this is what you need to watch for in all the upcoming inflation data reports, is Powell's emphasis not at the FOMC meeting or the presser, but in the 60 Minutes interview, when he somewhat suddenly mentioned the 12-month rate of change as being a key, as opposed to the 6-month rate of change or the 3-month rate of change. That's another way of saying we want to sort of elongate the analysis period to feel confident that inflation has come down and is likely to stay down.
Lizanne, a little weight to the tape here. The magnificent, whatever they are, a little soggy. Microsoft goes from a 412 over the last couple days down to 407 right now, even NVIDIA breaking down a little bit. Do you still model out it is completely normative to have a 10% correction? Is that still part of the Sonders playbook?
Sure, and a lot of people forget we had one in the latter part of last year. There was a 10% correction in the S&P, more for the Nasdaq from the late July to late October 10-year yield spike from sub 4 to up 5. So it's incredible how short memories are, as if the most recent correction was way back in the 2020 COVID era. And I think to some degree, not on a day-to-day basis or maybe week to week, but I think the bond market is to some degree still in the driver's seat for the equity market. And I think if we were to get an outsized move, especially tied to inflation on the upside in yields, I think that would be to the detriment of the equity market.
Lizanne Sonders, thank you so much. In honor of Lizanne, tomorrow, all of our music will be Led Zeppelin. This is really cool. I mean, he was with Steve Cohen over at SAC, and then Cohen bought the Mets, and Nick Colas said, forget it, see ya. And, you know, this is a guy who writes a memo, and it's read religiously on Wall Street because of his work. And like Mario Gabelli, I'm going to take it back to there's something about being an auto securities analyst, as Nick Colas was at First Boston a few years ago. It is just hugely read. DataTrek, again, we protect the copyright of all of our guests. Look to DataTrek to get Nick Colas's brilliant work.
Yeah, Tom, he had a pretty good career on Wall Street, but here's a guy. He goes to Haverford College, great school outside of Philly. He majors in Near Eastern archaeology. Are you kidding me? If one of your offspring came to you, Tom, and said, I'm going to major in Near Eastern archaeology.
Let's go there right now. Nick Colas, how about that Near Eastern archaeology to get you through EBITDA? How did that work?
Very, very slowly.
Very slowly. But he made up for it by getting his MBA at Chicago. Hey, Nick, thanks so much for joining us here. Warren Buffett out with his annual letter. You know what he didn't even talk about once was AI. What do we read into that? If Warren Buffett doesn't care about AI, is he missing something? Are we overplaying something?
Yeah, it's fascinating. You're right. He didn't mention AI even once in his letter, which is one of the most widely read, portfolio manager letters in the world. And I just take it as kind of Warren being Warren. He cares about fundamentals, and he cares about company management, and he cares about return of capital. AI is probably just a footnote for him.
Are you concerned, or to what level are you concerned, Nick, about this is still a very concentrated market. There's not a lot of breadth out there, whether it's the Magnificent 7 or 5 or whether it's just a handful of names pushing this market higher. The technicians tell me that's not really a healthy market. How do you think about it?
I totally take the point that it's probably not a healthy market, but it's the market that we have. And to some degree, at least we're getting some movement out of names besides tech. So Lilly is helping healthcare. Berkshire is helping financials. And those are two groups that are outperforming year to date. So while we're having still a lot of narrowness, at least it's narrowness in some sectors besides tech and tech adjacent. So I put that in the win column versus, say, last year, where it was really almost all tech for the first half of the year.
So when you think about this market here, Nick, I mean, do we have to be smart on earnings? Do we have to be smart on the Fed? I mean, I'm not even sure what's really driving this market right here.
That's the smartest question I've heard this month, Paul.
See,
the month's
Lisa?
ending.
The
month's ending. I mean, this is really, really important, folks. Paul Sweeney nails it. Nick Colas, am I a Fed watcher or a street watcher?
I think you got to be a street watcher. I think the market has said to a first degree of magnitude, rates don't really matter anymore. It comes down to what's the story, what's the theme. If it's tech, then it's AI. If it's outside of tech, then it's organic growth. So Lilly, for example, being the best example. It comes down to stocks. It comes down to sectors. We've got 3 winning sectors year to date, financials, healthcare, and tech. And that's the way it's going to be most of the year. This is kind of a mid-cycle market. This is a market where we're caring about growth, not rates.
To a guy that I miss each and every day, he was so kind to me, Clayton Christensen, in disruption. This morning we're seeing disruption at Macy's. Nick Colas, are we going to see a lot more disruption of the have-nots of corporate enterprise in the next 5 years?
Boy, yeah, I miss Christensen as well. It's a good point. And, his thesis was that disruption happens in perpetuity. It happens every day in every way. And so I think it's the single most important theme in investing, frankly, not just day to day and week to week, but year in year and decade to decade.
So, Nick, if that is in fact the case in terms of disruption, is there any scenario where I'm not overweight tech just like forever?
Our basic take on this has been no, you have to be overweight tech and tech adjacent because tech is now about, in 4 different sectors. But you do have to be long tech. And we actually done math that compared XLK to Berkshire Hathaway. And XLK usually beats Berkshire Hathaway on any given rolling 1-year basis back for 20, 30 years. Innovation trumps everything. Technology trumps everything. It's been that way for forever. I don't think it'll change.
Well, where are you? Paul was mentioning your work going back to First Boston. I look at AI. I don't know what I'm talking about. I'm not qualified to opine. But Nick Colas, I look at it where, okay, people are going to fail at AI, but there's got to be some winners out there. Is that how you look at it?
I look at it kind of in the sort of cliched picks and shovels paradigm where you don't necessarily want to be the person going out to look for the gold. You want to be the person selling the picks and the shovels and the jeans and the sieves to the people who want to go out and search for the gold. And, that's why NVIDIA is working so well. That's why, other names like Amazon should work fine.
So, Nick, you say that earnings matter for this market. What's your takeaway from this most recent earnings season we've just about to conclude here this week?
Yeah, this was kind of a C- earnings season for me. It didn't really knock the cover off the ball. You had some big wins, Facebook, obviously, Meta, NVIDIA, obviously. But by and large, this was kind of a very mediocre fourth quarter. And the market knew it would be, which is why we had that swoon last year. But I think we're fine. The rest of the year, earnings growth should pick up. But the current earnings season was kind of a nothing for me.
So what's the key driver for you for the remainder of the year? Is it going to be earnings? Do you need to see meaningful earnings growth in the back half of this year? Is there earnings risk in this market?
There is some earnings risk versus expectations. I mean, we all know that analysts guess too high and then have to cut down. It was the case when I was doing the job in the 1990s. It's still the case now. So earnings won't meet the street's current expectations, but there will be enough earnings leverage to give us 4, 5, 6, 7% earnings growth on, say, 3% revenue growth. And that's enough to keep the market going. The market's not just worried about this year. It's worried about showing earnings leverage for the next 2, 3, 4, 5 years. And we should get that extra recession. This year just has to show that it has some growth.
Nick, we're at 5,100, rounded up. I mean, do you have an XPX target out 1 year, 2 years? Are you doing an Ed Yardeni of the Roaring 20s?
No, but I do understand that I do think that there is a very strong tailwind to this market. I don't have an official price target, but I'm totally comfortable telling clients be long U.S. equities here.
Nick Colas, hugely valuable. Your daily look at the front pages around the world. She called me up today. She said, I got 20 ideas. I said, keep it to 4.
Yes.
Go.
Slash it. All right. We're talking about the Ozempic effect, first of all. This is from the New York Times. They're saying a lot of those celebrities that kind of, posted about their curves and how they're, going through all these things and a lot of fans, they gained a lot of fans. Well, now they have to explain how they dropped weight, because some of them are on these weight loss drugs. So it's this back and forth. The fans are feeling betrayed about it. The social media influencers, they're struggling over, well, how do I say this now? Because for so long I was talking about fat shaming and
Romaine
now.
Bostic's walking by right now. Romaine and I are not our fans are not worried about us losing our curves. I mean, I know that right now. Paul, what do you think?
Ozempic, the effect is everywhere. I mean, a lot of people, and unfortunately for a lot of folks who really need it, they can't get it because some people, Hollywood and just others are taking it.
Inform me on this. It's a diabetic drug.
Yes.
Correct.
And if I have a serious insulin diabetic issue, I can't get my drug because somebody's trying to figure out how to lose 70 pounds?
Yep.
Yeah.
Yep.
That's the
What
issue.
are the doctors
and it's expensive.
What are
it's
the
expensive.
Scripts. They're writing the scripts, and there's just not enough supply. So a lot of the pharmaceutical manufacturers, they're trying to ramp up supply, much like we did, during the COVID and the vaccines, but it's just going to take time.
Next.
All right, Wall Street Journal, that's where we're going next. The number of private equity firms owned by women, minorities, well, that's at a record raising capital the last year. It's starting to downfall. It's starting to dwindle for their fundraising goals. It was a report from investment firm Fairview Capital Partners. So they say that group of firms, the diversifying groups, it's running into the toughest market conditions. So some of those subsegments, here's who's seeing a decline. It's the number of funds being raised by Black, Asian American women who owned firms last year. That shrank for the first time. And then women, minority-owned funds, they overall have started to decrease their fundraising targets. And the reason they're saying their concern is because bringing diversity into venture, they're saying is going to help these overlooked segments. So that's why this is a concern for them. But they're starting to fall off.
I think it's just as interest rates moved higher, it just became harder to raise capital for everyone, including some of these minority groups. And so I guess it's not surprising from that perspective. But you hear from the folks in the financial services industry, they're trying to be supportive of diversity all across the industry, but it's tough. It always has been, quite frankly.
Most definitely.
All right, what else we got?
All right, so we got some tech here. Meta, we have the first true augmented reality glasses could be unveiled this fall.
This is
just when you got past the Vision Pro, right? Okay. It's an internal project to refer to as Orion. It's different from Meta's. They have the Ray-Ban smart glasses. It's different from, it's not like what you're wearing, Thomas.
I've got the Tom King dumb glasses
the Tom
here.
King glasses. Yeah. These are a little bit thicker. They're different from the Quest headsets too. So they're kind of going back to the whole Meta thing, it seems like. It's been in the work for several years under their Meta's Reality Labs division. No word on the cost of it, but this is from Business Insider. They're saying it's going to be unveiled during their annual Connect conference that comes out this fall. So we'll see.
I don't know. The stock has worked. The stock has worked dramatically. It's up 184% over the past 12 months, primarily because they're not talking about the metaverse. They're talking about cost cutting, driving profitability of the core advertising business, not letting Zuck talk about the metaverse. That's why the stock's working. So I don't know what's going to happen.
They're trying to bring it back
Can you
again.
actually hear music with the glasses?
No, you can't.
Does anybody, your kids, Lisa walks around with the AirPod things.
Yeah, I know. She's cool kids. Yep.
But do the glasses really give you good fidelity?
They're supposed to. Mark Zuckerberg, he posted a photo on Threads. We had them in the background. So
Threads.
They're Threads. Yes, Threads.
Yeah,
that's the other thing.
Is that even still on my phone, by the way? Because that was a thing for a week, literally a week. Threads was things for a week.
It's kind of
so my little
about.
social blurb, it's not there.
No.
My little social thing. Okay.
All right. One last thing before we go.
One last.
This is a doozy. Wall Street Journal. The see-through pants scare of the MLB spring training. Okay. So the uniforms.
This is embarrassing.
Yes. Apparently they're lightweight and breathable, but that causes an issue because the baseball players are worried that the uniforms are too sheer. They're revealing on the body. The tucked-in jersey tails. How they do that? It makes it look like they're wearing a diaper. So they're not very expensive. This is apparently Nike's new Vapor Premier line. It's like sweat wicking technology, recycled yarn, supposed to be lightweight. It's hot out where they are.
I have no idea what they're thinking. There was one season, I believe, in the NHL where they did something as stupid as this, and it was years and years and years ago.
Yep.
Just fix it.
I
understand. We don't want to go back. I had this is Chilson's Drugs a long time ago. I had a Little League uniform that if I was thrown into water, I would have drowned within a minute. It was wool. So thick. It was wool or whatever. I was like, what? This doesn't feel like a uniform.
Well, it's like out of a Seinfeld episode. You remember George Costanza when he convinced Steinbrenner to change the uniforms and they shrunk?
Help me here. Baby, you can find me under the lights, diamonds under my eyes, turn the rhythm up. Don't you want to just come along for the ride? Am I the only one on the planet who hasn't seen the Barbie movie?
Me too.
I saw it.
You haven't seen it?
I did see
What do
it.
you think, Lisa?
I thought it was okay.
That's what
my
I hear.
daughter loved
Lots
it.
of people.
My daughter really liked it. It's a very girl power.
Alex Steele is a huge fan.
Yeah. It's a very
Barbie.
girl power,
Barbie
woman
movie?
power
Yeah,
movie.
she picked it over Oppenheimer.
She picked it over
She
Oppenheimer.
picked it over Oppenheimer.
Ooh.
Yeah. So the whole, female empowerment thing.
That's
right?
what it is.
I mean, to my point here, I got to start watching Oscar movies just to keep up, so I can
With the zeitgeist, right?
do the job. I mean, you do the Barbie movie, and I mean, Ken took Ken's like in the Oscars, and all that. But there's like Dua Lipa. I mean, Dance the Night.
Yep.
And we're going to feature lots of Oscar themes here in the coming days. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.